Here on the Transparent FX Academy, every day I share my best market breakdowns, showing you guys how you have to analyze the market both from a technical and in order flow perspective to see where you can be looking for the next potential opportunities in the forex market. So without further ado, let's go straight to the charts and see which is today's pair. In today's video, I want to speak about eurnzd. Now, why do I want to speak about eurnzd? Because at the moment we have quite interesting price action and structure for a potential opportunity. So as usual, I will be keeping the analysis as educational as possible. First, I will be covering the technical aspect of this market. Then we will go and see what we have from an order flow perspective by checking the commitment of traders, which is what hedge funds, so the non-commercials in the market are doing. And by the end of the video, by using the combination of our technical and order flow analysis, we will be able to understand where we have the highest probabilities for a potential trading opportunity on the pair. Now, starting here on the monthly time frame, what do we have? Now, here on the monthly, we can see that the market has just provided a quite strong impulse to the downside. However, in all this impulse to the downside, there is one candle which is not related to the move, which is exactly this green candle here. If you can't see it, I will zoom in for you. As we can see, in all this impulse, there is only this green candle here that is not related to the move, meaning that while the market had this very strong bearish momentum, when the market hit this level, it reacted to the zone. So this means that this zone is previous support, which is now turned resistance and supply. And as we have already seen, the market has tested 3 times this level from a monthly perspective, and every time it has rejected the zone to the downside. So here in the monthly, we are testing and rejecting monthly supply and resistance, and we can expect more continuation to the downside. Going down on the weekly time frame, what do we see? Now here in the weekly, we can see that clearly we have just rejected a quite strong weekly historical structure resistance area for this market. In fact, this zone was acting as previous weekly support here. The market then broke below the zone, and at that point, the previous support was turned resistance here, again resistance here, and again resistance here. And we can see how the market last week has created this strong rejection to the downside. So once again, also on the weekly, we can see that we do have quite strong resistance that the market is rejecting to the downside. So at the moment, monthly and weekly are both indicating for a potential short-term rejection to the downside here for eurnzd. Just a quick thing, make sure that you like and subscribe, and also let me know in the comments the topic that you will like in the next video. Going down on the daily time frame, what do we see? Now here on the daily, the structure and price action that we have are extremely clear. We can see how this market has a quite strong area of previous daily resistance here that the market broke to the upside, and at that point previous resistance was turned support here that now that the market has broken it once again to the downside is turned resistance here, meaning that we are currently testing quite strong daily previous support turn resistance, and we can expect the market to reject the zone to the downside. Another thing that we can notice is that in creating this move to the upside, the market has also printed this W formation. Now, in general, after the creation of a W, what you expect is for the market to provide a move to the downside to complete the pattern at the previous resistance turn support, meaning that here on the daily time frame, both from a pattern and structure perspective, we do expect the market to provide this move to the downside to complete the pattern at this red candle here, which is the neckline of this W formation. Now, if we go and see what we have from a COT perspective, so commitment of traders, which is what hedge funds are doing in the market, we can see that on the euro, hedge funds lately have been increasing their net positions. In fact, we went from having 66.8k net positions all the way up to having 104k net positions with 236k long positions and 132k shorts. So the euro overall is starting to get quite strong. However, as we can clearly see here, even though net positions are increasing because the longs are getting added more than shorts, the shorts are still getting increased since they have basically been rising from the 82k that we had here all the way up to 132k, which is one of the highest levels that we had so far in the short positions for the euro. Meaning that even though we're seeing this strength overall, we are seeing proper shorting and position building for shorts. So anyway, a rejection to the downside, at least in the short term, is very possible. But anyway, if we go and see what we have on the NZD, everything is quite clear. We went from 2.5k to 8.5k net positions, with a shorts getting decreased from 18k to 15k and longs getting increased from 18k to 24k from an institutional perspective. So the euro is getting strong but has position building on the short side, and the NZD definitely is getting strong with longs getting increased and shorts getting decreased, meaning that we can easily get a weak euro and strong NZD, meaning that this W formation here on the daily can easily be completed at the neckline. So there is a potential short-term shorting opportunity here for this pair. So how we will be approaching this potential shorting opportunity with students? Now, as usual, we will be reactive and not predictive. The monthly, weekly, and daily timeframes, those are the best timeframes from a directional perspective. But when it comes to confirmations and entries, the best timeframes are the 4-hour and the other intraday timeframes. So with students, what we will be doing is monitoring price action from a 4-hour perspective and lower during this move to the upside. And we will be waiting for the market to shift from an intraday bullish market as we have right now to an intraday bearish market. And as soon as the market will shift from an intraday bullish to an intraday bearish market, at that point, we will be adding Euro NZD to our watch list. And as soon as the market will provide to us one of our valid entries, we will be taking a nice short with a good risk to reward and good probabilities at that point for the move to the downside and for the market to complete this W formation at the neckline, which is this previous resistance turn support here from a daily perspective. If you enjoyed the video, make sure that you smash that like and comment below. It really does support the creation of more free analysis education and updates for all of you. You can also click the link in the description that brings you to the mentorship program. It's a very complete program. First, you learn all the rules of my rule-based strategies, and then you trade the strategies with me. Every day, I give you a new daily market breakdown showing you how to apply the strategies with the entry stops and take profits. And you can also ask questions and get the answers the same day with the Q&A session. So it's a very complete program. I really suggest that you go and check it out. The link is in the description, and I will see you in my next video.